Hi, we are going to talk about standard costing. So this is this idea where you assign a standard price to your materials, a standard amount of them you're going to use, and you assign standards for overhead, and you base overhead you apply on the standards. So when you do that, you don't always get it right. So sometimes you have this differences we call variances. And so we're going to talk about those too. So in Chapter 9, we're going to talk about what the standards are, why we use them, how to compute and journalize the materials and labor variances. I don't think I'll have any journal questions on the exam, but we do work a problem. Compute overhead variances 3 different ways. So before we get into this, I want to remind you that problem 9.30, the answer is out there on Blackboard, and I worked through it on video, and I sincerely recommend looking at that. I really think that for variances it helps to just work the problems. They're really they're not that hard to calculate. So you just have some formulas, you multiply them, you figure them out. So you can do that. Alright, so price standards specify how much should be paid for the quantity of the input used, and quantity standards how much, unit standards is the cost to produce the product using these 2 standards. In other words, standard price times standard quantity. So you take your pencil, right, and the standard might be you use 1/4 ounce of wood, 1/10 of an ounce of lead, 1 metal ferrule, and maybe 1/100th of an ounce of rubber or something, right? And so those are the standards. And you can say typically we're going to pay 50 cents an ounce for wood pulp. I don't really know how they make pencils, but anyway, so you have these standard prices, these standard quantities, and that's what you use to calculate your inventory and what you use to apply your overhead. For example, you say, well, it will take, to make a single pencil, it takes 1/100th of an hour direct labor, and we pay for direct labor $18 an hour. All right, so something like that. And so you get the idea. We set up these standards. It's not always what we pay 100% of the time, but it's typically based on some kind of an average, ideal standards. If you're operating at maximum efficiency, we can create a certain number of pencils perfectly. Or we can make under efficient operating conditions. Sometimes companies pick Kaizen standards. We're not going to talk about that. We skipped that way back in chapter, I think it was 3. Or no, it must have been 4. But anyway, if you take a management class and they talk about Kaizen and this continuous improvement, you can understand that sometimes companies base their standards on continuously improving. So there would be this reduction of time spent, better efficient, that kind of thing under Kaizen standards. But we're not going to worry about that. All you have to worry about is that there is a standard. It's a certain dollar amount, or it's a certain amount of labor, and you can just work with the standard that we give you. Standards are used to help with cost management, planning and control, decision making, and product costing. So if you have standards and you get away from them, that helps you understand, we might be going away somewhere. So the approaches to cost assignment are actual costing, which to my knowledge, people don't really use. I mean, you might use it after the fact, but it certainly won't help you predict prices unless you make everything and then set your price and sell it. So actual is where, you keep track of the actual costs and then the actual overhead, and you know exactly how much everything costs, and that's your cost. Normal costing, which is what we typically do, is you apply your direct materials, your direct labor, and then you've budgeted some form of overhead that you apply using some rate. And standard costing is a separate costing system where when you move direct materials and direct labor into work in process, not physically move them, but when you move them through your accounts from direct materials account to work in process account, you move a standard amount, right? I'm going to make 50,000 pencils, so I'm going to move, 25,000 ounces of wood. I'm going to move the standard according to my journal entries. That may or may not be what actually goes into the pencils. Same thing with overhead. Everything is a standard, and you apply it at the standard rate. You assume if you apply overhead using direct labor, you are actually applying it using your standard for labor, not your hours actually spent. So here's a standard cost sheet, so you can see what they come up with. So you're making, in this case, they're making yogurt, and to make a quart of frozen yogurt, they use all those direct materials. That's what the normal price would be for 1 unit of the direct material, and how many do you need is a standard, and the standard cost. So yogurt, you pay 4 cents for an ounce of yogurt, and the standard usage is 25 ounces of yogurt. So the standard cost to make a quart of yogurt is $1, right? So you do that for all your materials. You take, your labor, your overhead. So there's a standard for everything. And if you look at the bottom right there, you see that at $2.40 is the standard to make a quart of yogurt. Not necessarily what they'll really spend, but that's the standard. All right. So you develop standard costs and how many you're going to use, right, for everything. Right? Standard costs for materials, labor, overhead, and the total of them is a standard cost per unit, and the cost sheet provides all the details. Now, because we use these standard costs, right, we are certainly going to have variances between what we budget and between what we actually use. That's not a surprise. I mean, if you think about strawberry yogurt here, well, the prices of strawberries are going to change from time to time. The price of milk is going to change from time to time. Of course, obviously you can rechange your standards, but if they change a little bit for a short period of time, strawberries are something you might need more of or less of. Strawberries are not 100% uniform. So you could see that you could have some strawberries that weren't very good, and you might cut some spots out of them, and you use more strawberries than you think or something, or they weren't very sweet, so you had to add extra sugar, right? Something like that. So you end up with variances all along the way. All right. A flexible budget is used to identify the direct material or labor costs that should have been incurred for the actual level. So you may recall from last chapter, we talked about how we can budget for a certain amount, and then we can flex our budget and see, well, what would we have spent if we knew that we were going to make that amount or sell that amount or whatever. So that's the same idea here. We take our standards, and based on what we made, we can flex them. We can look at a total budget variance, which is just everything, right? The actual price times the actual quantity minus the standard price times the standard quantity, and that's your total budget variance. And that's great. And we know there's a difference. We know we were off by this much, but we don't know, well, was that because we used more of this, or our labor wasn't as efficient, or what? What went wrong? Where did we go wrong? So that's why we have a bunch of different variances, okay? So on our next video, what we will do is we'll start talking about these specific variances we can do. And it's going to tell us a lot more information than just, yeah, we were off by this much overall, right? So that total budget variance tells us we were off, but we kind of know that. You can just look at two numbers and tell they're not the same, right? So that's informative. We want to know that we're off budget, but we're pretty much going to always be off budget somehow, some way. But we want to know, so we can get better, is where did we get off? All right? So that's what we're going to start talking about on the next video.